Thursday, November 2nd, 2017, Monaco 64, home of alternative economics and contrarian views. So it's 12:30 London. Bank of England raised rates as expected about half an hour ago from 0.25% to 0.5%. So they've gone back to the rate we had just before Brexit. After Brexit, the Bank of England had an emergency cut of 25 basis points. And we're still near zero. The MPC voted, the vote was 7 in favor of hiking and 2 against. The markets expected a vote of 6-3. So initially, when the news came out, the pound spiked a little higher, but then it turned around and it's down 1% now, or down 120 pips against the pound. Is at 131.26. And you might wonder, how come? How come it's down? You know, they've raised rates for the first time in 10 years. Well, the reason is that they actually said that, you know, the market, and I'll read it here from the Bloomberg website. It says, crucially, policymakers omitted language from previous statements saying that more hikes could be needed than the markets expect, which implies that officials are comfortable with pricing for 2 more quarter-point increases, roughly 1 late next year and 1 late in 2020. So that means Bank of England is basically indicating that it might only hike another 2 times, from 0.5% to 1% by 2020 in 3 years. So that's really inflationary, in my opinion. That really shows that the UK economy is not doing as well, you know, as people say it is. Nor the global economy for that matter. And the reason why I'm making this video is that they, on Bloomberg.com, they had a live program, and they had a couple of guys from JP Morgan Asset Management, economists, and one of them said, wow, you know, the fact that the pound's come down is actually good. They're probably happy at the Bank of England because that's going to help the economy. And I told myself, you know, what a, you know, moronic statement to make, because the economy is not doing well in the UK because we have high inflation. And why do we have high inflation? Because our currency has dropped so much over the last 10 years. So this guy's actually saying that more inflation and a weaker pound will actually be good for growth. And I'll put a link above, or, you know, in the cards, to a video I did a couple of days ago, Fiat Money Inflation and Britain's Lost Decade. And I talked exactly about that, how during the 19th century, when Britain was an economic powerhouse, the pound actually went up in value from 1800 to 1914. So that we had deflation, and the economy, you know, had the biggest ever growth. The Industrial Revolution, all the new technology, and the pound went up. So now, you know, since 1914, since we've gone off the gold standard, since we've, you know, inflated the hell out of our currency, the economy has gone downhill. And now you get someone from JP Morgan actually saying that it's good that the currency is going down. So what do I recommend for my UK viewers? Well, if you have a lot of surplus Bank of England notes, i.e. cash in the bank, make sure you protect yourself with physical gold and silver, precious metals, because they can't inflate that. Bank of England can't print gold and silver. They'll keep printing, you know, the Bank of England note, which is a promise, which, you know, is a promise to pay nothing really. And this is going to continue because only 2 more rate hikes in the next 3 years is nothing. You know, that will get us back to 1%. And historically, as I've said before, the average base rate for the Bank of England since 1694, when they were founded, is probably above 5%. So why do we have to stay for about 12 years near 0%. That will totally destroy the purchasing power of the pound. You know, the pound will still be a pound in your pocket, but it won't buy as much. So that's what's happened. Bank of England has raised rates, but you know, I think they've shot themselves in the foot, or they've done it on purpose. They're just trying to say, you know, there's a bit of inflation, we're going to raise rates. But deep down, it looks like if they were really worried about the pound going down and inflation and the debasement of the currency, they should be saying, you know, we're going to be raising rates again very soon, and we're going to keep raising rates until we, you know, squash the inflation. But they can't do that because contrary to all the stuff we hear in the mainstream media, economic media, and from governments and politicians, the economies are not doing well. All the statistics about unemployment are totally, you know, tinkered with. They don't count everyone that's out of work. So, yeah, prepare for more and more inflation. You know, maybe the numbers, the CPI, the statistics won't reflect that, but the cost of living is going to keep getting higher and higher, and the, you know, the amount of money you earn might even go up a little bit, but it won't buy as much because everything else is going to go, you know, the pound in your pocket is going to be worth less and less. So there you go. That's what the Bank of England has done. Just a little, you know, how can I say, they've basically paid lip service to, you know, to the markets, and no credibility whatsoever in terms of keeping a strong currency. But I guess they wouldn't want a strong currency, seeing that our country, the UK's got so much debt, be it public, corporate, or private. So that's it for now. If you enjoyed this video, please like, share, subscribe to my channel if you haven't yet. And you can also follow me on Twitter and on steemit.com. I'll talk to you later.